Indian markets are in a very, very interesting spot. Both Sensex and Nifty, they are trading near all-time highs. And as investors, you're all getting bombarded with new stock ideas, next hot picks. In this video, we are not going to be talking about the next stock ideas. We are going a little more fundamental. We are going to be talking about the stock selection process, stock picking process, which are very key to successful long-term investing. Hi, everyone. Welcome to our monthly post. When you're all getting bombarded with new ideas, we are going to be fighting for your attention in this video in terms of how to go about picking stocks. Hope it's going to be an interesting session. Stock picking and stock selection process is a very fascinating and exciting process. The reason why it is exciting and fascinating is when the bottom-up stock picking is complemented by contra investing approach, the rewards can be very, very disproportional. And that's the reason for stock pickers like us, the process is very, very exciting and fascinating. So if you look at our stock selection process, it basically boils down to 4 key tenets or key dimensions. To start with, at the most important level, you have the quality of business, and then you have quality of earnings, and at the third level, you have quality of management, and finally, the valuation metric. So these are the 4 dimension the entire stock selection process is structured around. And now let's look at each one of them a little more in detail. If there's one thing which is key or central to stock selection process, it is quality of business. You can never underestimate this particular metrics, especially when it comes to value investing model. If you look at our model, at the core of our investing approach and in the stock selection process lies this belief that when you invest in stocks, you're not getting a piece of paper, you are investing in a piece of business. With that approach, everything falls in place. You're not a market analyst, you're not a financial analyst, you're a business analyst. The focus is not on market action, not on price action, but on business action. So what is business action? Which primarily means that you're going to be looking at much more in detail about the metrics like return ratios, pricing power, competitive edge, free cash flow generation, capital intensity, whether the business is very capital intensive, or capital efficiency, which basically is reflected by the return on capital ROC metric. So these are metrics which you will look at very closely when you look at businesses. So there's another reason why focus on quality of business is important, especially when it comes to small and micro cap investing, because that particular space is more vulnerable for business failures and business model risk. So here to mitigate the risk, the metrics like choice of business, the long operating history, and the kind of low leverage and balance sheet, they become very critical when it comes to evaluating the quality of business. The second one, in terms of the dimension in our stock selection process, which is quality of earnings, which is again very interesting. This one should really understand there's a huge difference between the reported numbers and the health of those numbers. So let me give you some example. Let's take the top line for a particular business. The reported numbers could be anything, the growth could be anything, but the quality of top line, how do you look at it? How do you assess the quality of top line? Basically, one needs to look at the discounting, the sales returns, and the bad debt profile, and the overall debtor days. These are things which will really give you whether the sales is a real healthy number or it is the numbers which are just reported on paper. Similarly, when it comes to bottom line numbers, there's a way to look at the health of those numbers. On the headline basis, you would come to know about PAT and EPS and the operating profits. They don't tell you much about the business. Actually, you need to look at metrics like operating cash flow from the overall operating profits in terms of the ratio between operating cash flow to operating profits, free cash flow to the PAT number. Those are the numbers which will really tell you how healthy the business is and how good the business model is. So these are very important to assess in terms of quality of numbers and quality of earnings. Then finally, before we move on to the final valuation number, let us look at the management, which is a very tricky one and which is also a very critical one, and which is also very, very challenging in terms of evaluating management. So we look at the third dimension, which is quality of management. As I said, it's a very tricky one, and it's especially when it comes to small and micro cap space, it's a very challenging and difficult task in terms of assessing the quality of management. The reason is that this particular space is infested with a lot of risk. You call any other, any of those risks like business model risk, key man risk, the management debt, governance risk, and the solvency risk. Whatnot. You have all those risks which are, very, very prevalent in small cap space. So of course, we look at published numbers like, related party transaction, management compensation, skin in the game, and in terms of capital allocation. These are numbers which broadly tell you how the management quality is, but they don't tell you everything. So it is not very sufficient. Like for example, you need to ask whether the management is, when it comes to promise and delivery, whether the management has been conservative and credible. So for that, you need to look at, past track record. You have to go back and watch the management commentary for at least a few years to know whether the management has been under promising and delivering more, or over promising and under delivering. These are very critical, evaluation in terms of when it comes to management, quality. Similarly, when it comes to management's governance, whether they are candid and above board. How do you get those qualities from the published numbers? It's impossible. So here you got to do a lot of scuttlebutt in terms of tapping the channel networks, in terms of partners, employees, and channel networks of the business, and also the analyst and fund manager network to understand how has been the track record for the management when it comes to these metrics. So it's not easy. It doesn't stop there. You got to go further and meet the management and size them in terms of their energy levels and vision and value system metrics. So that's the reason I think this is both, in terms of evaluating management, it's both very challenging and also exciting. And that keeps the entire process very, very interesting for stock pickers. Now, finally, when it comes to valuation, the key question which the investors have to ask is what is the discount one is getting at the current price vis-a-vis what the business is worth? Are we getting any discount, or is it trading at a premium? This discount is critical because that gives you the margin of safety and the cushion if something goes wrong in the business prospects from what you have forecasted or from what you have expected, which always happens in a business. Any business, I think nothing goes as per plan. So you got to have the cushion for forecast going not as per expectation. And that's where the importance of margin of safety and the discount comes. So valuation is again critical. And in terms of assessing whether you're getting this business, once you decide the business is attractive, the quality of business is good, quality of earnings is good, superior, and quality of management is great, then the last thing you need to look at is valuation, whether you get the discount, required discount. Once you get the discount, then the decision is made whether one should go ahead with those, one should go ahead with that opportunity. So these are the 4 dimensions which I want to talk about when it comes to stock picking process. I hope you found the entire process interesting. So with this, let me conclude this video post. Hope you found the entire thing informative and interesting. If you found this very interesting and very informative, please do click like to our video post. And also, if possible, please do subscribe to our video channel so that you can get our regular updates. Thank you for watching, and happy stock picking and happy value investing. See you in my next video post. Thanks a lot.